Got it. Okay, moving on to Residency Bangsar, billed as the transit-oriented value proposition.
Right. This is a leasehold project by UDA Holdings, the well-known GLC. Location is on Jalen Bangsar itself. The report places this slightly on the Bangsar fringe, maybe not absolute core Bangsar like the others we discussed.
But its defining feature is that immediate proximity to the Bangsar LRT station.
Absolutely. This project's USP is all about ultimate urban convenience and accessibility, but at a relatively more attainable price point. It's explicitly marketed as the most affordable new residence in Bangsar, offering true transit-oriented development, or TOD, living. They claim a 3-minute walk directly to the LRT station.
And that's the Kelana Jaya line, which is super strategic for commuting, right?
Incredibly strategic, connects so many key areas, and it offers a really wide variety of unit types from 580 SUP studios all the way up to 1,442 SEA 3-bed dual-key units.
So that variety, plus the price point, provides the most accessible entry for someone wanting a brand new place with a Bangsar address. Prices from RM 560K up to RM 1.9 million.
That's the idea. Works out to an indicative PSF of about RM 900 to RM 1300.
Facilities sound pretty comprehensive, standard for urban living, focused on convenience.
Yeah, geared towards everyday use. The lifestyle here is really centered around being car light, saving time, cost, stress on the daily commute.
Makes sense. So for investors, that unbeatable LRT access is the absolute primary draw. Almost guarantees high rental demand from that huge pool of commuters using the Kelana Jaya line.
You'd think so. Plus, the dual key options add rental flexibility. And the lower entry price opens it up to a broader group of potential investors compared to the ultra-luxury options.
But the cons for investors, leasehold tenure. And the branding might be perceived as less premium than core freehold options, which could potentially cap long-term capital appreciation.
That's a fair assessment. And high density plus nearby rental competition could also put some pressure on rental rates over time.
And for residents, the massive advantage is that car-light lifestyle. I mean, imagine ditching the traffic jams. It's also a more attainable price point to live right next to all of Bangsar's amenities.
Huge plus. Downsides for a resident, though. Potential noise and pollution from living directly on Jalen Bangsar, the leasehold status again. And potentially some compromises on finishes or the scale of facilities compared to the higher-priced developments nearby.
Okay, finally, let's look at River Park Bangsar South, tagline, the nexus of connectivity and modern living.
Right. This is a large, high-density leasehold condominium project. Developer is Molten Burhan. Quite reputable. And it's important, as the report stresses, that this is located in Bangsar South, specifically the Kampong Kerinci area. It's not core Bangsar, although it definitely leverages that Bangsar brand association in its name.
Gotcha. So its key USP is strategic connectivity at a very attractive price point.
Exactly. And a major practical advantage highlighted is that the developer actually invested RM 10 million to build a dedicated direct access ramp connecting the project to the federal highway and NPE. That's a huge potential time saver for residents who drive.
That's significant investment from the developer.
It is. Plus, it's conveniently located about a 300-meter covered walk to the Angkasapuri KTM station, and it's roughly 800 meters from the site of the upcoming MRT3 Pantai Permai station, which adds significant future value potential down the line. It's also Green RE, certified for sustainability.
Okay. But it is high density.
Very high density. 332 units across 3 towers. The unit sizes are practical, though, geared towards families or shared living, mostly 2- and 3-bedroom layouts, ranging from 812 to 1,180 square feet.
And this is the most affordable option on a price per square foot basis, right? Starting from RM 523K up to about RM 818K plus puts the PSF at just RM 650 to RM 750.
Correct. Most accessible PSF among these 5. Facilities are described as extensive, over 30 modern amenities, apparently designed to foster a community feel within the project.
So for investors, that very attractive entry price is obviously a major draw. The developer's investment in that dedicated highway ramp is a significant de-risking factor for the location, improves daily life.
Definitely. And there should be strong rental demand from the workforce in Bangsar South, Mid-Valley, plus those using the KTM and eventually the MRT3. An interesting point the report notes is a high owner occupancy rate, around 80% among initial buyers.
Oh, okay. So what does that imply?
Well, it suggests a more stable community feel and potentially less direct rental competition within the building itself compared to blocks that are almost purely bought for investment.
Makes sense. Cons for an investor, though. Leasehold status. The Bangsar South address clearly lacks the core Bangsar prestige factor, and the very high density means there could be significant competition when it comes to reselling on the secondary market later on.
All valid points. For residents looking to live there, it's an opportunity for an affordable new home in a really well-connected, rapidly developing area. That dedicated highway access ramp is a huge practical benefit for daily driving commuters. And it's conveniently located near malls, commercial hubs, schools, and the wider Bangsar South Mid-Valley area.
Downsides for a resident, then. It doesn't have that core Bangsar cachet. It is very high-density living. There's maybe some reliance on those privately built access roads. And surrounding road congestion in the wider area can still be a challenge, despite the dedicated ramp for the project itself.
Okay, phew. So we've covered the market context and taken a pretty detailed look at 5 specific developments. How does the report kind of tie this all together into, like, strategic recommendations?
Yeah, it essentially tries to match potential buyers or investors to the projects based on their goals and risk appetite. So for an investor whose main priority is capital preservation, low risk. 111 Menerung is positioned as that flight to quality option. You're paying for the security of freehold, ultra-prime location, low density.
Makes sense. What about someone looking for more of a balance? Growth and rental income, medium risk.
There, it's presented more as a choice. You could go for Bangsar Hill Park, appealing with its whole lifestyle concept and those strong demand drivers we talked about. Or you could choose the Lantern, offering freehold status, that boutique exclusivity, and strong TOD potential. The choice there really depends on personal preference, lifestyle focus versus boutique freehold value.
Okay. And if the main goal is just high-yield rental, maybe accepting slightly higher risk.
Then Residency 38 Bangsar stands out purely because of its unbeatable immediate LRT access. That direct connectivity is expected to drive really consistent rental demand from commuters. Yield focus.
Got it. And if you're looking to actually live in one of these places?
Right, different priorities. If prestige and maybe downsizing are key, then 111 Menerung is clearly the top-tier choice. For a lifestyle-oriented family who wants those resort facilities and decent space, Bangsar Hill Park looks like the fit. The design-conscious urbanite, someone who really values walkability and maybe a unique building aesthetic, might lean towards the Lantern Bangsar. For someone who relies heavily on public transport, wants maximum convenience above all else, Residency 38 Bangsar is the clear frontrunner there.
Makes sense, the TOD aspect.
Yeah. And finally, for the budget-conscious young family or professional, River Park Bangsar South offers that modern, connected new home at the most accessible price point of the 5.
Okay, that maps it out pretty clearly based on different profiles. What about looking ahead specifically to that 2026-2028 timeframe when these projects are completing?
Yeah, the report acknowledges that the arrival of, roughly 2,500 new high-rise units will undoubtedly intensify rental competition in the area. That's a lot of new stock hitting the market around the same time.
However, and this is crucial, we need to remember that segmentation we discussed earlier. These projects aren't all competing directly for the exact same tenant or buyer. The report actually predicts a flight to quality, meaning developments with genuinely distinct USPs, whether that's freehold, tenure, unique lifestyle offerings, exceptional transit access. They will likely perform better, command better rents or prices, compared to more generic offerings. Differentiation becomes key.
The power of that Bangsar Halo brand is also clear, isn't it? It seems to extend its influence, its desirability, to uplift even fringe areas like Bangsar South.
It definitely does. But the success of those fringe projects, the report cautions, heavily relies on them actually delivering on their connectivity promises, especially the timely completion and effectiveness of major infrastructure like the MRT3 line. That future value is tied to infrastructure delivery.
Right, makes sense. Ultimately, though, the report seems to reaffirm Bangsar's long-term resilience. Those core fundamentals, the extremely limited land supply, that established ecosystem of amenities and lifestyle, its enduring reputation, those aren't really going to change, are they?
Not easily, no. Landed properties, purely due to scarcity, will likely continue to be seen as trophy assets, long-term holds.
And the high-rise market, it isn't static either. It seems to be getting more sophisticated. The report suggests future success and value will be increasingly tied to things like sustainability features, professional building management, creating a genuine sense of community within the development.
Yeah, it's evolving. And this ongoing evolution layered onto those strong fundamentals is probably what will cement Bangsar's status as a dynamic, highly desirable address well into the future. It adapts.
Well, that was a pretty significant deep dive into the Bangsar property market outlook, pulling heavily from that comprehensive material you shared.
They certainly covered a lot of ground.
Hopefully, this has helped unpack the most important insights for you, the listener, giving you a clearer picture of the current market dynamics.